Hi, my name is Pat Keon. I'm a research analyst with Thomson Reuters Lipper, and I'm here to speak to you about fund flows activity for the week ended Wednesday, December 7th. Let's start by taking a quick look at last week's market activity. Well, the Trump rally continued. The Dow Jones Industrial Average and the S&P 500 Index gained 2.2% and 1.9% respectively, which puts their post-election gains at 6.6% and 4.8%. For the year to date, the Dow is up 12.2% and the S&P is up 9.7%. Let's take a look back now at our fund flows activity for the week, starting with our macro groups. Equity mutual funds saw net outflows of $9.9 billion. Taxable bond funds took in net new money of $1.5 billion. Muni bond funds had outflows of $2.1 billion, and money market funds took in $14.7 billion. Let's take a closer look at our equity fund groups now. We'll start with the mutual funds. The $9.9 billion in net outflows was the 39th straight outflow for the group. This is its longest streak in history for net outflows, during which time they've had total outflows of over $184 billion, which puts them on track to have the largest annual net outflow ever. If we turn our attention back now to the weekly data, we see, as usual, money is leaving domestic equity funds at a much higher rate than it's leaving non-domestic equity funds. Domestic equity funds saw outflows of almost $9 billion last week, while non-domestic equity funds saw just about $1 billion exactly leave. Let's take a look at equity ETFs now. Conversely to mutual funds, equity ETFs took in almost $8 billion in net new money last week. This is their 9th consecutive week of net inflows, during which time they've taken in over $54 billion. The gains this week were paced by ETFs in the S&P 500 index classification. Specifically, SPY and IVV took in $4.6 billion and roughly $850 million in net new money, while the largest net outflow belonged to PowerShares QQQ at roughly $2.6 billion. Let's move on to our taxable bond fund groups now, starting with mutual funds. We see that the group had net inflows of $1.5 billion last week. This broke a streak of 5 consecutive weeks of net outflows. The major contributors to last week's gains were high yield funds and loan participation funds, which took in roughly $1.5 billion and $1.2 billion respectively. Turning our attention to taxable bond ETFs now. This group had net outflows for the week, about $412 million. The largest outflows belong to the iShares iBoxx investment grade corporate ETF, which had about $78 million leave, followed by the iShares 20-plus year Treasury product, which had net outflows of $28 million. On the plus side, investors put $31 million in net new money into the PowerShares Senior Loan ETF. Let's move on to our next group now, which is Muni bond funds. Munis have not fared well post-election. Investors are pulling their money out of the safe havens and looking to put it to work. The $2.1 billion outflow this week was the 4th consecutive outflow for the group, during which time they've seen roughly $9 billion leave their coffers. The hardest hit groups this week were intermediate muni bond funds as well as high yield muni debt funds. The intermediate group had net outflows of roughly $580 million, while the high yield group saw about $470 million leave. Let's move on to our last group now, money market funds. The net inflows for money market funds this week was the 3rd consecutive week of net inflows of greater than $10 billion, as they took in $14.7 billion in net new money. The largest players this week were the U.S. government money market category, as well as the institutional U.S. Treasury money market category, which had net inflows of $5 billion and $4.8 billion respectively. Well, that wraps up this week's report. If you're interested in taking a closer look at the data, please go to our website at www.lipperusfundflows.com, and please join us here again next week, where another one of our analysts will be speaking about that week's fund flows activity.